We all know 2022 was a terrible year for stocks, right? But if you want to relive it, then you check the incredibly bad performers at the bottom of the S&P 500, the 25 worst of the good riddance year of 2022. I felt like I was dumpster diving when I went through these stocks looking for comeback stories. But I got 5 of them. 5 incredibly fallen angels. I mean, the only question is if they're finished falling. And that, honestly, I don't know. But done a lot of work on these. Let's go over them. Let's take them down. Starting with Netflix. We're discovering that while Netflix got a huge boost from COVID on the subscription side, they also took a huge hit on the production side. We had a real shortage of good new content for a long stretch on Netflix. They just didn't talk about it. But now they're back in business, rolling out terrific programming relentlessly. Hey, by the way, I feel the same way about Amazon Prime, but that's not large enough to move the needle for Amazon as a whole. I believe Netflix has turned itself around because they were so confident on that last conference call. You know, for almost 2 years, their conference calls were funereal. Even when Squid Game took the world by storm, not this last one, though. Sure, the stock's not exactly cheap, and lots of growth-oriented money managers want to find improving franchises, and that's not, but that is Netflix to a T. See, I can't wait until their next call, so I know what to binge on besides my wife's Mezcal. Next, I've got 2 real losers, and you're going to be shocked. When I say these 2, you're going to say that Cramer's lost his mind. All right? Here we go, though. The first one, Stanley Black & Decker. The second, VF Corp. 2 companies with iconic brands that have seen their stocks just crushed by recession fears that could be interesting contrarian plays for 2023. Look, I know you don't want to own Stanley Black & Decker going into a house-related recession, but that's why people sold this darn stock here. Look, I mean, if you sell it here, you can't be as worried about a recession down here, can you? No. I like it down here because when the Fed stops slamming the brakes on the economy, Stanley Black & Decker will still be there with even less competition than it has now. They really dropped the ball in logistics last year, and that was bad. But I don't think that's going to matter to the customer. Still, if you like this one, I put on a small position here and then gradually buy more on the way down. Absolutely no hurry. While the stock already reflects a great deal of negativity, this is very much of a could it get any worse play? And sometimes that's a risky bet.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.